Okay, on this episode, I would like to welcome Dana, and she is a local lender. And what I love about this episode is it's helping buyers understand and what to expect when getting a loan for a mortgage for a home. My favorite part of it is when she goes into details of someone who might be in some type of service industry, whether it's in a beauty service or a service industry in the food industry. Sometimes when you're making tips, it is hard to understand or gauge how a mortgage or a home loan would work for you. She talks about first-time buyers. She talks about different resources. She talks about things that I had no idea were out there for us, down to a down payment. If you don't have the money saved up for a down payment, there are grants for you. I think the moral of the story, after I did this episode with her and we shut everything down, I realized how many resources there are, and what people just need to do is walk in the office of a local lender and come up with a game plan. So on this episode, the focus is real estate and all things Savannah as far as mortgage, lending, how to get there, how to purchase. If you don't have cash, this episode's for you. Meaning, if you need to take out a loan to purchase any type of real estate, whether it's investment, first-time buyer, second home, vacation home, this is the episode for you. And it's a local lender here in Savannah. This is Dana, and she's a lender, and we're going to just pick her brain. And I think what I want to focus on, I met her at, what was that luncheon? It was just a luncheon of pretty much where the market's at, where it was a really informative.
Yes, it was economic forecast.
Yeah.
And what the election effects would be on the future of the real estate market and so forth.
Yeah, so I met her there, and I had the idea for this podcast, and we switched over. So I already have another podcast, The Beat Goes On. I had a discussion about that. And then I was like, I think I just want to go full force with a new podcast based on different things in Savannah. And this podcast, in this episode, I want to talk about lending. And the reason I want to talk about lending is because sometimes people are lost.
Right.
And I learned a lot at that luncheon, and I was like, people need to know this. They need to know what they're getting into. Specifically, I used to bartend. I worked in the service industry. My business that I own is still service. So it's really easy to get caught up in the way you deal with money in the service industry. And sometimes purchasing doesn't seem like it's possible.
Right.
So I want to answer any questions about what that looks like. And I know specifically, like, you need to put your money on paper, but I just learned something new before we even got on started recording, that you don't, in my head, I thought I had to have like 1 to 2 years. I'm going back to my bartender days, 1 to 2 years of just putting every dime in the bank, whether it's cash or whatever, before I could get, even think about getting approved for a home loan. So that's what I want you to just kind of walk us through. Like, what does it look like if you're making more cash flow than anything, but you also want to purchase a house?
Right. So there are lots of regulations regarding money laundering and all kinds of things when it comes to the lending industry. So, if someone is setting aside cash, for example, in their safe or their mattress or whatever, that the lender is not going to recognize that money.
Right.
So they have got to get it in the bank and get it seasoned for at least a couple of months prior to making any application. That money does not need to show up as a large deposit, because then they're going to ask where it came from. And if it's cash, they're just going to basically say it doesn't exist.
Gotcha.
So that's one of the things to know about assets. There's really kind of 4 major things that lenders look for when they're trying to get a loan for someone. Credit is a key factor, so their credit has to be meet the minimum standards. Most lenders, minimum credit score is 620, but there are some programs that allow lower, and that's just going to be dependent on a number of factors.
They probably read the report, in fact, or
like the report rather than just the score?
Well, it's
different.
Different programs have different requirements as well. So it's
but there are programs to even help with a lower credit score.
Absolutely. Okay. Yes. There are people out there that help with credit repair and things like that can help people get to where they want to be with their credit.
Yeah. So they don't have to be embarrassed about it or anything. Just go.
Exactly.
Just go in and start the process and work in that direction.
Right. You do have to be careful about who you go to. There are a lot of credit repair people out there that aren't necessarily the most, honest, or they charge a lot of money for what they do. And it's, there's actually free services out there. So you definitely want to do your homework when it comes to that.
Okay.
Then income and job stability, that's another piece that's pretty important. And we run into a lot of challenges with people don't realize that if you're self-employed, if you are commissioned.
And when you are in any type of service, let's say it's a bartender or a server, anything like that, it is very independent because you're bringing cash home from the bar. It's not like a paycheck. So it's very similar to being self-employed.
Right. Yes. And it depends on, how the employer manages that, because a lot of employers nowadays, when it comes to tip income and all that kind of stuff, they are counting it. They're accounting for it, and it's going into people's paychecks and it's showing up. Not all places, of course, are like that. So if they can't prove that they made the money, if they're not filing their tax returns and showing that they have this much money or that they've earned this much, then the lender is typically not going to be able to use it. And there's usually a 2 full year history for any kind of variable type of income. Okay. So commission income, self-employed income, they want 2 full years tax returns to prove an average of at least what that person is making.
Gotcha.
If they've had over 5 years self-employment, sometimes they will let us use the most recent year, which can be helpful sometimes if somebody has a bumpy year, a couple of years ago or whatever, and we don't necessarily have to introduce that into the file. But yeah, the stability piece is big. You can't, that's one of the biggest things with lending is they don't like a lot of moving pieces. They want stability. They want to see that, okay, we're getting this income and that income is likely to continue, that, the job type, even if they've changed jobs, for example, they're looking for that similar line of work.
Gotcha. So if they've worked in the restaurant industry, I did it for 8 years. If I had shown that I make around, that I collectively made income, was consistent, and I deposited and I paid my taxes on that, then I could prove like I've had this job for this long.
But they're probably going, if you just changed jobs, for example, and you have that variable income, they're probably going to want to see you there more time on the job.
Okay, that makes sense.
They like that stability where they get an idea, because every time somebody changes, it doesn't necessarily mean that they're going to be making the same thing. You could be working for, a high-end restaurant and go to work for a lower-end restaurant where the tips might not be as much and things like that. So they want to see in this place that this is stable.
This is true.
And then debt to income, that's another piece of it. They're going to look at, okay, what's the new payment that you're trying to get for your loan? How does that add up with the other debt that you may have, your car payments, credit cards, any revolving installment loans, child support, alimony, separate maintenance. They're going to look for those things. And there are debt to income ratio requirements and limits for every single program.
Gotcha.
So, as a lender, we know which programs are more flexible. And so we just get all the client's information, put all that together, and then figure out, okay, which program best fits them.
Right.
And discuss the options with them to figure out what's going to work.
And that's
best
why I was so
client.
Pleasantly surprised at the luncheon was how many programs that there are out there, and also how helpful the lender actually is. I think sometimes it's like I have said like a million times today. Sometimes it's a scary process to even go step foot in the door because it's intimidating, especially because the lifestyle of someone in the service industry is like cash spend. I mean, I used to do it,
Right.
and I would
Paycheck to paycheck.
only, yes, it was very paycheck to paycheck. It was a lot of money, but it's just like the lifestyle around the money. There's a book by Barbara Sloan, and she went from service industry. She was actually a stripper, but she went to,
I've actually done loans for people.
Right.
We're in that industry, so.
Have you? That's awesome.
Yes.
Well, and so they had to put their cash in the
money.
bank. They had to put their cash in the bank, but she had to retrain. The book is it's called Tip. It's about retraining the way that it works but it's really like with money, like coming out of that mindset of spending it. It's so easily made. I would spend it wasn't even paycheck to paycheck. It was like day to day. I would go in and make the money. So you have to retrain your brain with money so that you can head in a direction to take a loan out from the bank. And like in the beginning, just to backtrack, credit. Now, then after credit, we're having,
income and job stability.
And it needs to be 2 years at least.
Yes. Now, for example, if someone goes to college and gets an engineering degree and then comes out of college and gets a salaried job in the engineering field, they will use their income pretty immediately.
Okay.
Because that's a very stable, likely, it's
and there's
W-2.
Special programs for doctors too.
There are, different lenders offer different things for certain service industries as well. There's teachers, police, doctors, some lawyers. There's a variety of different programs out there that are specific to folks in those fields.
Gotcha. I love that it's not. You would think that most of the programs are just for salaried people, but I love that there's a map that you can use. You can go in there, talk with the lender, and they can map it out for you.
Absolutely.
So is there anything other than the job and the credit? Is there anything, then they just match you with the program that best fits you?
Well, so the 4 kind of major things that they're looking for, like I said, are credit, income and job stability, and you also have assets. So your down payment or closing costs, where is that money going to come from? So, we talked a little bit about, cash, which is not king in the lending world. Having a down payment saved is great, but there are lots of programs out there that don't require a down payment if the client is a first-time buyer and they meet certain income restrictions. So, and those change per program and where the property is located. So there are a lot of different options out there. So once again, they just have to go and talk with a lender and let the lender sort through, they get all of their details, the client's details, and then we figure, okay, which boxes can they fit in, and then lay it out for them. You can do this, or this, and what may the pros and cons of some of those things and things like that. We try to, help them figure out, what their goal is. Some people's goal is keeping their payment as low as possible. Other people's goals might be, it's a shorter term loan, so they want the lowest interest rate that they can get, things like that. So it's just, we go through all of that and sort through what.
So if anyone's ever intimidated, there's literally assistance and programs to help with credit, with
absolutely, yes,
with what it looks like for you in the history of your job and how long you need to be there. So even if you haven't been at your job long enough, or you haven't reported all of your income, if you're in the service industry, you can set up a plan to how to get there. And then even after that, if you don't have enough for the down payment, your first time buyer, there might be, you might qualify for a program after that. I think that's just so relieving to hear, because a lot of people just don't know. They don't know that there are programs out there.
Right. And I feel like the asset piece of it is the easiest hurdle to overcome, honestly, because there's so much opportunity out there, and there's leeway for certain things. If people have a 401k that they can borrow against, we've seen a lot of people use that for their down payment if they don't fit the other, boxes for, grants or, low down payment assistance, things like that. There are ways, gifts from family, things like that people can get to use.
Really,
for
they
their
just need to
funds.
go in some lender's office and just see what the options are for them.
I highly recommend that they talk to
even if you're not ready, even if they're not ready right then to purchase, knowledge. Having the knowledge will help prepare you, because if you don't know, you don't know.
Right.
So it's good to be knowledgeable about everything in life. But I think something like this, instead of thinking it's not attainable for you, that you can't do it or you're not there yet, you'll do it one day. As a realtor, I'm just encourage people, no matter what your job is, no matter what you have going on, just go talk to a lender. And that's the comfort I got after meeting you guys at the luncheon. I was like, everybody just needs to go talk to.
Exactly. Don't be afraid. That's what we're here for. I do recommend that people talk to a lender that is experienced.
Yes.
And don't just, you see online lending, all this stuff going on, people can make an application from their sofa.
This is something like where online is more accessible and attainable now. Like where online is easy, you would think easier. I think this is something where it is nice to have a personal relationship to, even though that seems old school or whatever. I think having a person, it's a vulnerable to show your everything that you got going on in your bank account in your life is a very vulnerable place to be. And I just think it is so helpful when you have someone that's knowledgeable, experienced, but also a human.
Right. Absolutely. Yes.
With you.
No doubt. As long as I've been doing this, obviously back in the day, it was all face-to-face. There was no online anything. You took an application by hand in front of the people as they provided the information.
Right. I missed that.
It really, I feel like it was a lot more effective. Now with everything being online, people don't pay as close of attention to what they're actually getting. They don't read their documents, and that's a lot of legal stuff to look at.
It's a lot of legal stuff.
And I used to go through those forms with people, and give them, here's the gist of what you're signing.
Especially a first-time buyer, especially someone who's never done that before.
Right. None of that's really happening anymore. Not
that's
much.
Disturbing.
And it is. And, I almost feel like, it's like we have all these rules and regulations, and, they're trying to, of course, avoid fraud, which is, pretty rampant in many areas. And, this whole online thing just really, it almost facilitates that as opposed to going the other direction.
All right, that's a wrap with part 1 with Dana, the lender. If you have any questions, just look in the show notes. If you have a specific question about part 1, please hit me up. I'll get you in touch with Dana directly. So just hit me up. All of the contact information is in the show notes, and we'll see you next week for part 2.